Hey guys, good morning and welcome to the Camp Financial Stock Market Update. We're going to cover what happened yesterday, July 6th, and take a look at the pre-market for today, see what's going on out there, see what we can expect today. So if you listened to yesterday's show, you'll know that the early indications were that the market was going to be down today, or down on the 6th, and it followed suit. The Dow popped off at the morning. The Dow and the S&P both down pretty quickly. Down by 10:30. Both were so the S&P 500 was down about 15 points, about 0.75%. The Dow was down a little over 100 points, and so it was a little less volatile. I think it got down about 0.5%, maybe just a little over 0.5%. So that was all pretty much expected. With the couple days of rallies that people were looking to take some profits and lock in some gains that they had received over the last couple of days. So now the one thing that was interesting, right? So the market took off down, but then by noon we were pretty much flat. NASDAQ was flat by 11 actually, and the S&P was flat by a little after 11, in between 11 and 12. And then it continued to rally. All three indexes continued to rally throughout the rest of the day. What drove the market rally yesterday? Well, that was basically driven by the simple fact of the Fed is, I mentioned it yesterday, I think. If not here, I mentioned it on my Anchor show. But Fed mentioned the likelihood of them being able to put a rate increase through is continuing to drop, right? So what's that mean? Well, as I've said before, if there's no incentive to purchase bonds, so U.S. Treasuries are 10-year Treasuries less than 1.4%, and German bond 10-year, the Japanese 10-year, all these bonds are below. Those are actually below 0%. If you can't get yield, you've got to be more aggressive to be able to make money with your money, right? As an investor, your goal is to be able to make money with what you have invested. Well, if you're getting 0% to put your money in a bond, that's kind of worthless. So you're trying to find somewhere else to put your money. And that's why we had the big rally as the day went on yesterday. Fed has pretty much said that it doesn't look like they're going to be able to increase rates. So the markets have got to rally, to offset that. I looked for this headline yesterday afternoon that I found. I saw it. And let me take a look right now and see if I can find it here, so you get to see the inside of the things I'm reading. So I like to use Yahoo Finance just as kind of it's a nice place. They got a lot of good information out there. I mean, all the stocks, they do a good job of keeping the financials up to date and that sort of thing. So I really like using that, and I also use FinViz if I'm looking for charts and that sort of thing. And I can't find the headline. It doesn't look like the headline's out here anymore. But essentially, at the end of the day yesterday, I saw a headline that says, the markets are rallying despite It was essentially despite what's going on in the bond market. No, that's exactly why the market is rallying. Come on. If you just think about it a little bit, right? Anybody who's been invested in the stock market knows if you can't get yield anywhere else, you're going to buy stocks. If you're going to buy stocks, it's going to push stock values up. It's pretty self-explanatory, right? So this idea yesterday that the stock market was rallying despite of what's going on in the bond market is just insane. So if all you do is read and you don't think about what's happening, the media will tell you what they want you to hear and what they want you to think, right? I mean, that's essentially what it boils down to. I don't know. I was very frustrated by that yesterday. Still am frustrated by it. I think it's very misleading to the general public, and I mean, investors who do this for, study their investing on a regular basis look at it and laugh, but other people who just happen to watch CNBC or read CNN or something, and they would read that headline and go like, oh wow, what do I need? So what's going on? Should I call my broker? Should I do, take everything you read and then try to understand what it is. If you don't know what it is, ask somebody a question. Feel free, send me an email. I'll help answer questions. I have no problem with it. I'm not going to give personal advice through the podcast or through the YouTube show, but if you have a question about something that you read, I'll take a look at it and see what I think it means, and I'll let you know. So, all right. Now, with all that said, let's take a look and see what drove the indexes yesterday. One thing to know, I guess, before we get to that, so let's go ahead and take a look. I've seen, looks like S&P 500 futures are basically flat. Dow futures are flat today. It doesn't look like there's a big expectation of trading today, so it should be. We'll see how it starts, and then we'll see what people come out and say. See what see what companies say. See what Fed bankers, chairmen of countries and all that. We'll see what they have to say today, and then that'll give us an idea, what's going to happen. So, oil. Now, I did see. I'll go ahead and put this one out there. I did see a note yesterday that the U.S. now has a larger reserve supply of oil than Saudi Arabia and Russia. I haven't validated that. I just read the headline. I find it interesting. But it looks like there's probably some truth to that, just based on what happened in the market yesterday, right? So looking at the S&P 500, the 5 worst performing companies: Marathon Oil, Marathon Petroleum Company, not MRO, MPC, Tesoro Corp, and Valero, 3 oil and gas refiners, all with some pain yesterday, down 5% roughly each. Down. One was down. Valero was down 2.3. Tesoro and Marathon down a little over 5%. Netflix down, and United Airlines down. The airlines, I see a couple of them in the bottom 20 here, and I'm intrigued by that because gas prices are coming down, and usually that's a good sign for the airlines. You know, the gas price had ticked all the way back down to what's $1.86 here, I think is what I saw yesterday. So that makes sense that the oil and gas refiners are going to feel some pain, you know, based on that drop. So the other one, Netflix, I have to take a look and see if there's some news that came out on Netflix, and I'm gonna go back and take a look at the oh, there we go. So Netflix was downgraded twice in the last couple of days. Downgraded by Needham on July 5th and downgraded by Jefferies on July 6th. Jefferies' downgrade was from hold to underperform, and you know, the Jefferies obviously is a pretty stout. Historically, they've, you know, always had a nice following. So when they downgrade a company, it tends to follow suit in the stock price. Let's take a look, and that's also what jumped on United Airlines, was the downgrade by Credit Suisse. And you know, so they just downgraded the stock from $64 to $42, and the stock's trading at 39. Well, the stock's been in a downward trend since, I mean, so it first broke below the 20-day moving average back at the end of March, early April. Early April, it dropped below the 200-day moving average. Then it did bounce back. And then once it dropped back below the 200-day moving average in about mid-April at $55 a share, the stocks just continue to be crushed. I mean, it's down. It's now what, 28% in from the middle of April until today. So you know, a little late with the downgrade probably, but it makes sense, right, with where the stock's at. Now let's take a look at the S&P 500 and see who performed well yesterday. Top performers yesterday: CarMax, Martin Marietta Materials, a building materials company, Celgene, Nucor, and Edwards Life Sciences. So a couple of, well, a biotech and a medical equipment company, and then a basic material, industrial good, and a service. So we got a whole bunch of, we're kind of all over the place as far as industries that were up. But healthcare definitely dominated the top 20. And then still down there at 20th today, up 2.5%, Newmont Mining, volatility, fear, you know, no yield. Gold is gonna take off in this type of market. So, you know, obviously it's already been running since mid-January, and it doesn't show any signs of slowing yet. So CarMax was up 5.6% yesterday though. Martin Materials 4.3, actually Martin, Celgene, and Nucor up 4.3, and Edward Life Sciences up 3.8. So let me take a look at CarMax real quick and see if there's any news on it yesterday. Nothing, no upgrades or downgrades. So let's take a look. So after the market yesterday, we got a news piece that says, okay, well they did do back on July 1st. Looks like they've got a security vote. Research report came out on auto dealership equities on the 5th. I can't get this other article to pop up, so we're just gonna blow it out. But it says the used car market, what's driving growth. So there may have been something come out yesterday for them. describing their growth path. And now my computer doesn't, my browser is completely locked up on FinViz. There we go. Let's take a look at the Dow Jones. We're going to try to run through these pretty quick, so I've already hit my 15-minute mark, and I don't want to hold it. I don't want you stuck here all day with this. But so the top 5 performers: Merck, Home Depot, Cisco, Exxon, and Nike. Not much of a surprise again. All of those companies, I believe, do pay a dividend. So people are running toward dividends right now. Yeah, they're all paying. Nike pays a 1%. The other ones, Home Depot's 2.1%. Merck, Exxon, and Cisco, all between 3 and 3.6%. So not a big surprise that there's a flight to safety there, and those companies get a little dividend yield. Get a stable company, a big company that's not going to get beat up as bad on the downside in the market. Advancers versus decliners. We had 7 companies down yesterday out of the 30, so that shows a strong day for the Dow, and kind of leads to what we talked about previously in a couple of the shows, that Dow companies are going to be good to be invested in for a while here with this market volatility. So the bottom performers were DuPont again. We had Visa, Procter & Gamble, Coca-Cola, and 3M. Some of those are interesting. Visa's been on a downtrend since kind of the early part of June. So not a big surprise there. Procter & Gamble, probably a little sell-off, just taking profits as it's run up $4 in the last week or so, a little over a week. Same thing with Coca-Cola, run up from 43.5 to 45.30. Not really a surprise there, probably just some profit taking. And then 3M is kind of in the same boat, but they were all, even 3M was only down 0.25%. With the exception of DuPont, all the other ones were down less than 1%. DuPont down 1 3/4. So that's it, guys. Like I said, early. If you don't know what the financial media is telling you, feel free to send me an email, chrism@campfinancial.net, and I would love to answer some questions, and hopefully we can build a relationship through the podcast here. And I can continue to provide good advice, good trading thought ideas for people out there. So that's it for today, guys. Thanks, and happy trading.